essentially with McEwen, you've had a turnaround scenario that has taken longer and been more expensive than I've thought, and Rob McEwen and the group behind McEwen have thought, in terms of just startup issues at one of the, or restart issues at one of their main mines at Black Fox in Canada, the depletion of one of their mines that was there for years. This is a nominal part, El Gallo in Mexico. But then also the Gold Bar project in Nevada was a mine startup. And what tends to happen, and this is right to the point of, like, you know, if you think that somebody can just flip a switch and have more gold into the market, go talk to McEwen Mining or any of them out there, how difficult it is, the cost overruns, the problems that come in with the engineering stages to build the mine. And I think with McEwen Mining, they've had the definite worst of that out already. They already did by May, and it's really just kind of drug on a bit longer before the operational, I think, turnaround really kicks in. So I see a lot of torque and upside there. Really beta, because if you look at McEwen, this is run by Rob McEwen, who is the CEO and chairman. He calls himself the chief share owner. He doesn't take any salary. He owns over 20% of the company that he cut, but it's close to $175 million in checks. And his cost average, he has bought more in the open market in the last 3 to 6 months-ish. His cost average is in the high ones US. And right now, I believe we're right around that, below $1 US. And when I recommended initially here, it was around 70 cents and a little bit lower, and it had doubled in the weeks following. And that was just, that was a small little, you know, spike re-rating. It's faded back with the sector. But you're talking about somebody who, during the 90s into the early 2000s, when gold was in a terrible market, Rob McEwen started when it was a $50 million market cap gold corp. He came in, he essentially did some very unconventional things, and they had found in the Red Lake district an extremely prolific area that became a very profitable mine for Goldcorp. And he did this in a time frame where not only was he coming in at a very small junior stage, but, you know, so he grew this with drilling, connecting the dots, taking it in as a producer, a driving producer, but, you know, basically acquiring other assets, acquiring other projects, putting stakes into other companies. You know, he's a very good quarterback in that way. International Tower Hill is it's a different animal in the sense that this is a massive deposit of a gold-only deposit, the biggest in North America, in Alaska, called the Live and Good Project. And when you look at some of these stage companies and assets, I just look at them versus, you know, what is the price you're paying per ounce of gold in the ground. And that could be, there's different stages that you have to prove up to call them certain categories. Starts with inferred, then you have measured and indicated, then you go to proven and probable reserves, and move it up the ladder. The more you have the proven and probable stage, which is at the end, there's been a tremendous amount of work done on that. These are things that you know, really should add to the ultimate valuation of dollars per ounce that are reflected in the market value of the company or in a buyout. And International Tower Hill was at $100 million market cap-ish US when I talked about it last time. That was probably around 68, 70 cents, and McEwen maybe a little lower. And that stock, you know, they added $250 million to that market capitalization within about 7 weeks after that. And that was, you know, just people learning about it. It was a stale story from before, but that deposit hasn't gone anywhere, and they've been doing work on it, and they have, you know, Paulson and Co., Electrum Group. I mean, these are substantial shareholders that they're patient. They make a lot of money over time. We know that. Certainly in this sector, they've got, you know, huge financing behind them, but they really just have to wait. You know, they had to wait for above $1,500 gold to be in the conversation because of the economics of Live and Good. We know that, we've known that. And really that leverage, if and when gold does go higher from here, could be extraordinary. And GoldX is also a situation where I just think this thing, essentially, when you look at Does it have the biggest upside of any juniors? Well, it doesn't, because the risk, the downside here, I believe it's very, it's lower than normal, much lower than normal, of companies at this market capitalization and whatever you're looking at, whether those are discovery plays those drive market values a lot when you're going through the discovery cycle, these development stage opportunities, and they have a lull, which is when they build all this out, what they pretty much have, and they have to move towards getting into production, and then that's where the return profile kicks in. But with this situation, it's absolutely extraordinary. I find it to be probably my favorite risk-reward situation when you balance it out. I mean, we all know that if you've got something that's going to possibly go up 10, 20, 50x, there's a lot of risk. There's a lot of risk for volatility. There's a lot of risk for God knows what. There's usually a very similar correlation. This company's got it all, and it really comes down to, I believe it's the most exciting new gold discovery play. I don't know if it's in the world, but it's in North America, I think, in terms of anything I'm missing. I know a lot of these bigger, more exciting projects, and I don't see anything like it. And there's some reasons for that. It's very unique. And the biggest money I've ever made in the mining sector in the juniors is getting in early on in a new discovery. And as they build this out, that's why Voisey Bay went from 4 to 170, and Friedland was a big part of that. But it's because of the drill results, the expansion of this exciting new deposit that we didn't know was under the dirt before. And so discovery plays, getting in at a certain stage and riding that expansion is how you make the most money in the space. The situation overall for both of these is, you nailed it in the sense that the overall global allocation by portfolio managers and asset managers is very low. It's been very low with gold. It's increased in the last year to a level that is probably, I haven't looked super recently, but we're still around % ish. And so that, even being increased by 0.5% is such a massive amount of flows into what's a pretty good sized market, 13-ish, $14 trillion, certainly, but into the mining space, there is, I believe I have to re-look at my data, but all of the gold mining sector put together is something like a bit more than Apple and or perhaps Amazon, and that's it. It's very small. So when you're talking about the money flowing into gold, that will have the intended effect in the sense that as a store of value and as a lower risk, lower reward scenario than both the junior miners with the leverage and also the downside. You have to look at, it's the same correlation both ways, which is why, when we saw with the juniors through that bear market, many of them were down 93, 95%. Some went bust, when the price of gold went from 1900 down to 1050, 1100. So, it's a very big difference, just like, and not as big of a difference than Bitcoin, in the sense that Bitcoin was down in that last collapse 85, 87%, and then the altcoins, many of the altcoins, the smaller ones, they were down 99.5, 98. So when you look at the money coming into a big market like that, it will have the intended effect of being a store of value and likely gains on top of that, depending more or less on what your currency is doing. That's why I price fiat currencies, not, when you look at the dollar as the strongest out there against other fiat that are all being debased, okay, I'll take it. I'm an American, but what's it doing against gold? But in any event, that could really move certainly that market, definitely the junior market, which could pop like popcorn with a small movement of allocation. And I believe it's going to, the timing is a little bit tough on when it absolutely explodes, but we've made huge money over the last couple of years. And it's the area, when I look at the cryptosphere, Bitcoin will do what it's intended to as well, but they have the same general drivers. Bitcoin was created, whomever Satoshi was created based on the model of gold and gold mining. Okay, so let's pay attention to that. That you look at the ability for it to be quote unquote deflationary with a fixed float, and it's a global potential asset. I mentioned this in my last video. It's like a low float, globally branded, relevant to everybody penny stock that is like new money in gold.